Today's number is 17, as that's the percentage that the Japanese stock market went up in just 1 month, reminiscent of periods that we've seen before. Something that happened in the 1980s that actually took 30 years to unwind. Yes, guys, we are starting to face some big problems in the financial system. With $50 billion being called upon on last Friday in the bank market, we are starting to see the signs that the Federal Reserve may need to start QE faster rather than later. And if they don't, it could have dramatic implications to one of our most important aspects of being bullish right now, liquidity. With Bitcoin now at its anchored VWAP, Solana ETF seeing record inflows, Palantir now showing us that earnings continues to look pretty good, what exactly is going on in the world of stocks, commodities, and cryptos? In today's video, we'll discover everything from the data to the macro to what you need to know about the abundance of opportunities right now. Guys, don't go anywhere. Great to have you here. We'll see you in a moment. Well, welcome back, everyone, to The Daily Show. My name's Thomas Atkinson. It's great to have you here, and we have a lot to talk about in markets because we've just seen some sneaky moves from Wall Street that we need to discuss. Just before we get into the data, including what's going on with inflation, I want to quickly remind everyone that if you haven't already, make sure to sign up for the VIP free weekly newsletter. We're doing them into the end of the year, and we are sharing big exclusive charts that are just in that newsletter once a week. Make sure to do it. It's free in the comments down below. And obviously, it has been a really great success in terms of seeing your feedback already. You guys are loving it. Now, let's start off here with inflation today versus the 1970s. What has been going on? Well, we talked about this back in 2024, and it was our expectation that this entire year would not really see huge amounts of reinflation. In fact, we expect it to stagnate and hold. Now, why is that? Well, we've only got one data point, but it comes back to the 1970s. Obviously, a period of stagflation that caused, of course, certain asset classes to do better. Some of those were rare earth minerals and metals, gold, and even real estate held its own during that period of time. But could we be leading back into it? And would that suggest that 2026 is the year that you need to be most scared for when it comes to this? Well, a lot of it comes back to actually what the Federal Reserve is going to probably have to do. Yes, they're probably going to have to do QE again if they're going to keep this stock market alive. And as they are now cutting rates and further stimulating certain areas of the economy, especially due to deregulation and now lending in the bank processes, it makes us wonder about this very question. We posted over on our X account this chart here, which shows that from Liberation Day, we've actually seen real inflation or true inflation increase. And it's starting to accelerate again with a breakout just off the latest data reads that we've got so far. And remember, we're starting not to get these data reads now. So where is it going to be if this government shutdown continues, which we now expect to most likely go past, of course, the biggest ever government shutdown, which again could cause concerns for the markets, which currently have been very stable in, of course, this aspect. Now let's have a look at US home prices, history versus the 1890s all the way to now. So there have been, of course, extreme booms and extreme busts when it comes to housing. And over the last, 20, 30 years, of course, we've seen a lot of speculation in land asset. Now you can see here that if you look at the 2006 bubble, even with inflation taken into consideration, this one is now worse. And that will come as no surprise to any viewer here, especially if you're in some of the other countries in the world, Australia, where I'm from, because this is out of control in this country, accelerating at a pace that we have never really seen. And what it shows us is that we now have a super bubble in homes across the world that everybody thinks is the new norm. Now, it's very important that that happens and that we continue to see people thinking it's the new norm, because remember, you can't crash when it's being called a bubble, e.g. what's happening with the stock market right now. You generally crash when everybody thinks it's the new norm. So, of course, we're looking for that in 26, 27, if we do believe there are going to be problems on the horizon. So let's talk a little bit about this $50 billion. Of course, the standing overnight repo facility boosted up to $50 billion over on Friday. And a lot of people look at this and they say, wow, this is going to explode. Everything's a concern and we need to be really scared. Of course, the overnight funding rate went up as well, 35 basis points. And this basically showed us that people needed money quickly, or at least someone did, but it was kind of put back into the system. So I'll just kind of read a few key points here in terms of what happened. So we saw, of course, the overnight dollar borrowing blowing past 50 billion. We saw a surge coming in late in the session. So someone definitely needed cash fast, and it was not via the Fed window. So it was basically, this showed that it was real funding market. It needed to come in the real funding market, and that, of course, the SOFR ripped 35 basis points above the federal funds rate. So it was quick money needed quickly. So is this kind of potentially end of month noise? Yes, I do think it could certainly be so, but it does make us go back to a few key points. And we actually saw something very similar, which you'll see most people talking about, which was 2019, where we suddenly saw the plumbing in the system, that is the financial system, break, and we had to see the Fed step in. Now, do remember, at least initially, this is not going to be the problem. Look at the bonds market. The bonds market is going to tell us all we need to know, because we have to assume any issue here is going to instantly be picked up by the Fed, and the Fed's going to come in and say, oh, we'll do what we need to do, which of course could be QE in this case. And I do expect, and we have said this here for the channel for a long time, that QE is coming back. Now, why is this all important? Well, it's happened in 2007. It happened in, of course, 2019, and we saw it several times in 2020. The big thing here with this chart is that now banks are holding less on-hand capital than 2020. So effectively, we are now seeing a market where the banks are starting to get a little bit more risky as we see more lending due to deregulation. And if we actually look at the overall kind of time period of how these markets end up exploding, remember, it starts off with reform. We end up getting, of course, lots of regulation. Then we get, of course, deregulation coming through later on. And then what we get is we get this massive private kind of equity market that ends up exploding, that then causes, of course, the feedback loop. So what's actually happening right now is we need to look more at what's going on in the private equity market. And again, that's going to also come back to having a look at bond spreads, which we do track on this channel. So if you're first time here, make sure to subscribe, make sure to hit that alert bell, because we're excited to bring this to you. Because you may say, well, this sounds really scary, but realistically, we're excited because it's kind of like, playing a bit of Inspector Gadget. You've got to find what actually gives you edge rather than just what's an interesting story. This was certainly a problem, but it doesn't necessarily mean, oh, go panic, sell everything, run away. It's just another one of those macro kind of reads that you look at and you say, okay, I need to be paying attention to this. Now, we did see Michael Burry come out at around the same time, October 31st. He came out and he said, sometimes we see bubbles. Sometimes there's nothing or something to do about it. And sometimes the only winning move is to not play. Now, obviously, this gets a ton of views, and everyone, of course, then snapshots all of his calls back in the last couple of years. And I just thought it was interesting to see him come out and straight away play that thing as soon as we started to see issues in the kind of bonds, well, not the bonds market, but of course the liquidity markets. Now, is liquidity very important? Yes. Do we see it drying up? We're starting to. So something will need to be done over the next couple of months if we're going to continue an extremely strong bull market like we've been seeing. So here's a big question. In just 2 days, I think this becomes the longest government shutdown of all time. Now, according to Polymarket, it's expected that we will actually, on average, continue the government shutdown in the US until at least November 16 plus. And this basically will become, I think, a problem that's in plain sight. A lot of the time, markets don't really care about something until they do something that is unusual. Now, will the government shutdown end? Interested to see your thoughts. I would probably say it won't for quite some time. And again, it could become a storyline that is used as an excuse to give us a small pullback. Would it be a storyline that I would sell and run away from? No, because guess what? Like click of a finger, it could be fixed. So realistically, we don't look at that as being the main problem. We're looking at, of course, liquidity. We're looking at the debts in these markets as being the major issue. So let's talk about the Hindenburg Omen. I'm not going to mention this too much more until we get more clusters, but just for anyone that hasn't viewed so far, remember, this is a great early signal when used in conjunction with other things. Do you need tons of signals? The answer is quite simply yes. And even if you get it, sometimes you might get a little bit of a pullback or sideways market, but overall, it is still bullish until you start to get a ton of them. Speaking of a ton of things, we have new highs. I'm just going to read some markets here. We've got Latin America, Euro Stock 600, the Nikkei. My good, that is going absolutely ballistic right now, and it is scary in some ways. S&P 500, NASDAQ, China. We follow the price before we follow the narratives. Have a look here at the Euro stocks. We've got some more coming up later in today's show. And you can see here that the Japanese market has been on a burner. It was actually up almost 18% in a month. So that's some insane numbers when it comes to these markets. And of course, it makes you wonder if we are looking at one of these markets that is going to go completely parabolic. The thing about the Japanese market is it often does go on runs like this, and then it goes epic, and then it will fall and actually lose quite a lot of that percentage over a period of time. But once the leverage comes in, which obviously it's there right now, once we have government policy the way it sits, it can get pretty ballistic before it goes bad. Remember the stories of the 1980s, where the Japanese economy, in terms of the emperor's house, I think it was in Tokyo, that particular piece of land became worth more than all of the land in California. Now, just let that sink in. That is the most insane thing I've ever heard, other than the tulips. And I think it's even more insane. One area was worth more than all of California's real estate. So you can see how far bubbles can go before they truly do pop. And you just have to hope that that's not where we're going in the AI bubble, because if we do, yeah, the unwind is going to be epic. So let's talk about the positive signs here. Earnings is going up, and we are seeing beat rates, 85, 85, 85. You know, we're getting that percentage beat rate that you want to see, and we're getting upgrades here. Take a look at the broader market, including the smalls. Look at the smalls go. They're going ballistic in terms of the earnings right now. And this is a good sign for the longevity of a bull market. You do not usually see a bull market go bad when you've got earnings coming up like this. When they start to slow and they are not accelerating, that's when the issue starts to come into it. So do remember, earnings are realistically the backbone of the market. And you might say, but the economy's stuff, Tom, it's all going to go bad. Yeah, but the stock market is not the economy. Remember this. So one of the things about the stock market is it's actually making bonkers money because, of course, it's getting benefits, especially the big businesses, which are all that really matter at the moment. And those tech businesses are just saying the word data center. And if we say data center, we're going to make a lot of money. Let's now talk about Palantir, quarterly revenue growth. Well, it's up quite big, and you can see here that Palantir continues to do some big numbers. It was up quite a lot, then it went down in after hours, which shows the volatility. I think it was up 7 at one point, then it fell all the way back down. Here is App Economy Insights in terms of their update on Palantir's revenue. It was pretty damn hot when you look at that number, but obviously the stock price is also pretty damn hot. So congrats, I guess, if you've been in it for a little while, running into, of course, this hype, which is, I guess, justified when you look at those year-on-year numbers. Let's talk about the strength of the market. 7 months up in a row. Now, is this rare? Yeah, it is pretty rare. In fact, it's a very strong market. You can see here only a few times this has happened. 1 month later, sometimes it actually goes sideways. So this could be a little bit of a slowdown here in markets because of that. But 2 months, 3 months, 4 months, 6 months, very strong generally. So again, strength generally continues to bring strength. And you can see here when we have very strong years of over 15% up till October, we tend to be very strong into the last 2 months, 95% of the time. Here's another read of a very similar, the same stat, 95% we're bullish. So again, the data, the structure, the current markets around the world, all going up. It all points towards a decent amount of strength right now in these markets. June to October, above the 100-day moving average, with September and October at all time. Again, when this type of thing happens, you get some pretty damn good reads into the end of the year. And it starts to mark out this type of chart. This is our overlay chart that we're using here from Mark. Obviously, give him a follow on X if you'd like to. And you can see here that if we do follow similar paths, all points to generally being kind of bullish into January, and then maybe having an issue, and then starting an incredibly volatile 2026. And that's kind of the way I look at it. I think if you haven't been subscribing to this channel or you're not aware of it, 2026 is not going to be like 2025. It's a midterm year, tends to be more volatile. It's coming in with the same type of structure that you want to be on top of. So it's going to be a cool trader year, position base year, and it could be kind of wild for investors. More leverage, more deregulation, in some ways more scariness, but I also look at it as more abundance and opportunity. Speaking of abundance, we're seeing whales coming back into Bitcoin for the first time in a while. Those are the charts a little bit blurry. The old whales went positive here. So of course, we're looking still for potential signs of weakness into strength because of the halving cycle, but the Solana ETF flow as well came in pretty good. So basically, we've got new exchange traded funds for crypto. Obviously, you've got your seed capital, and then you've seen pretty strong numbers coming out here for BSOL, with each day so far reporting positive inflows. And I think that's important to note that generally speaking, there's still a lot of demand. And although the market's coming down, remember, we now have Wall Street in crypto. So people are starting to lose faith in crypto because it's lost what made it kind of special. And I don't know why anyone was celebrating Wall Street coming into anything. But basically, this was the way it kind of ended up looking. Now, let's have a look at the S&P 500. One of the concerns for a lot of people is that we're now getting even more concentrated. 46% of the market is now big tech. And this makes us start to question, are we going to see, a change here in the markets in terms of something happen, something break? Because we're not seeing the percentage of stocks rising up to get to those really extreme levels. Well, one thing is, usually when you're looking at this, is you're saying, well, has it turned down? And the answer is, again, no. So what's happening? Yes, breadth is declining, but generally there is still quite a lot of strength. All right, well, let's take a look at the US 500. So some of the things that happened over the last 24 hours, we had too many puts, which made us think that, of course, the market would be unlikely to come down. They've now alleviated a little bit, but what we do have is we have some important levels. We've got the 6750 zone, which so happens to have a few puts on it. It also happens to be kind of closer to the options level low today. The daily 20 moving average, which has been a pretty good buy pressure level. And of course, we have the previous high. So we're starting to get big zones appearing, and the market is still, of course, generally bullish. So when you're hitting certain levels like this, these are where you're basically expecting buy-ups or people to come back in. This is the key zone, though, that we're looking at least for now, in terms of potentially buyers in the day markets. And of course, for investors, they're going to be looking more down at these 6,600 levels, which is where we've seen major support pressure so far. If we do end up getting a bigger pullback due to government shutdown concerns or something else, then we're most likely going to go back to what we call the weekly 20 moving average. And that's, of course, the key level. But although some markets are showing overbought signals, it's not really a sign that's good enough to just say short. If you've done that the whole way through, then you'll be getting kind of, brutalized during this market uptick. Remember, at the moment, it's still been a series of higher highs and higher lows. If I had to guess, though, I think there could be some narratives coming in because of everything that's been happening. We've seen the big tech stocks, the biggest tech stocks now come through. And of course, we now have crypto, especially Bitcoin, hitting a key zone. We'll talk more about that later on, because actually it could be the Bitcoin market and the crypto markets that start to make you stay, well, wait a second, are we going to get these slightly cheaper prices, a weekly 20 moving average, a little bit of weakness in November? Starts to come into play, and I'll explain why. So let's have a look here at firstly what's going on with the options market. You can see the next 24 hours, it's clear that 68.20 is the most call strike level. And that means that, again, the markets may come down underneath that just to make more money, because obviously, yes, we're in positive gamma, but I could see it coming underneath. Then 6,800 becomes the strike here. And you can see there's quite a lot of stacking of calls. So the calls are all sitting for 7K. And we know that, of course, if we get that new high, that's past 69.12, that we're most likely going 7K. That would create positive gamma. And we've seen the effects of that. Speaking of positive gamma, Tesla. I got to clap, everyone. Good work, guys. Look at this thing go. The haters, oh, well, it's okay. So look at this. We've got positive gamma. A few people been on this one. Obviously, 500 is the strike. You want to go usually before that. But 468, very nice price action, very nice flow against the press, against the narrative Remember, if it's in the press, it's in the price. This is an options stock. Price action, options. It's a match made in heaven when it comes to this one anyway. Nvidia still doing okay, holding above 200, though at fair value in terms of fundamentals if we're looking at the forward gauges. And Bitcoin facing off on its most important level yet, 60, 61 for the puts. We know this is a big level. You can see 60 coming up quite a few times in different options expirations, including some of the OPEX ones. And why this is important is because it also is the anchored VWAP. So this is a very important level in the markets. And of course, we will need to be paying a lot of attention to what happens next. When it comes to gold, you guys can see here that we have some pretty interesting zones, particularly the 360. We've already been talking about how gold is probably going to hold, at least for now, the daily 50 moving average. That's at around 38.50 in terms of the strike. And we are currently above that. So again, the options are marrying up with that level if we should come down there. Now let's talk about strength into strength. One of the things that you look at is, do we have a broadening market? I wrote about this in the weekly newsletter. Again, links in the pinned comment down below. And I talked about how the global market was seeing earnings upgrades. Now, again, that is completely separate to what you're thinking about in the economy. We're seeing a weaker jobs market. We're seeing, of course, companies start to now have to put things on sale. It's not like 2021 again, but it's a different type of market. It's kind of almost coming back into, more of the government funding and government spendings holding this stuff together. And that is helping so many different places go bullish. Also, rare earth minerals and metals are helping a lot of countries do better. So you can see here, ILF, this is spiking up. We obviously have the stock 600 you guys saw before the Nikkei. We'll just have a quick look at that again because it is an absolutely wild market. Look at this thing. This is what happened back in the day. And this is just so crazy when you think about the percentages. I just want to show you this here. This is 6,800 up to 38,000. That's a 464% return. But this is nothing to sneeze at. I just want to show you, since Liberation Day lows, we are up 70%. 70%. And you might say, oh, what of it? Doesn't matter. Well, the thing about this market is when it ramps like this, these are 3 monster candles. I get concerned at 3. Let's just say that. 3 monsters. They're not normal. They are abnormal, very wild candles. So what you generally do is you're obviously going to be riding the trend, but I expect extreme volatility. It reminds me a little bit of where we were with gold when we hit into those 3800s and I started saying, yeah, I think we keep going up, we'll keep riding the trend, but there's going to be that signal at some point that becomes so overbought. And it just so happened it was 9 weeks up in a row, never the 10th week, boom, liquidity, people running around the streets trying to buy candelabras. It was pretty much all the signs there. So certainly a key point in the markets. We've also got Meta. I just thought I'd bring this stock up. I'm getting a lot of questions about this. Another day down for Meta. And of course, this could be that head and shoulders pattern. The only reason I'm bringing it up is not because we want to focus on this stock, but I just want to focus on why buying the dip is not really a great trading or long-term strategy when you especially are not buying high-quality stocks. Dollar cost averaging is one thing, but if you buy the dip, remember you do worse on the dip buy than on the rally buy. So you want to buy generally strength or very key levels if you're an investor. This has not completed its head and shoulders, so you guys can work that one out and check it out after this. Now, what about the bonds market? Is it flinching? Not yet. I'm still looking for the bonds market to flinch, guys. And like we've said all year, it just hasn't cared. Even during Liberation Day, it barely cared coming down to support. So we're not seeing these massive blowouts yet. And when that happens, yeah, okay, we can be concerned, but we're just not seeing it. So I think it's very important to also always look at the markets and say, have we seen signs of peril yet? And they're just still not there. And of course, we'll update you if we do see them. Let's have a look at the US dollar. Very good. I give a clap for this. First target hit. Look at that thing nailing against the press, nailing against the general concepts. It was particularly a great trade if you took it there. So well done to you. Now, do we have this as resistance? Yes. If it breaks this level and closes above it, where's the dollar going? Most likely going to go up 101.60. A few of you guys have asked me the question, will we then see dollar become superior again? I don't think so. I think the dollar is still going to decline ultimately. But again, it just shows you when it becomes a crowded trade, you want to start looking at the price action. And if it shows you against the sentiment, sometimes it's a very, very good trade. Let's have a look here at gold. Daily 20 moving average came up, went down against it. Daily 50 is down here at 38.50 area. So obviously trapped for now. We expect that. We expect silver to also have a problem up here, which it did. And some people will say, is this an inverse head and shoulders? Certainly could be, but we are waiting for more information. On oil, very nice. Look at oil going. Oil services, particularly one of the favorite sectors of ours recently, but oil barrels, nothing much happening. And when it comes to NVIDIA, you guys can see here that it's just hovering up the top. But remember, if semiconductors are still hovering or going up, you can't be too concerned. The biggest problem with semis right now is something we did mention in our live show, that if you take at least that length, not the full length, but full length is going to be 80%, you're actually getting towards, what you would see as kind of the continuation, particularly when you look at semiconductors versus the SPY. That's the one we were looking at in terms of the ratio. So it is starting to get up there again before some consolidation, but I don't think too concerning. Now, what about Tesla? Well, I'm going to give another clap because that's actually pretty sweet. So Tesla's obviously aiming for that just before 500, strength into quality price action. Very repeatable. It's very cool. We've done it a few times here on Tesla, obviously nailing over here as well pretty well. So the good thing about this stock is it just really is an options/TA combo meal deal. So it's doing all right. And we have to expect, remember, Elon to just flog any concept he can to make it sound like it is the robot AI future. And I expect that to be a very strong narrative into first quarter next year as they unveil more information about Optimus. And it's all about, it's just hype. Can we get some hype? And even recently, there's that random robot that ended up, I think, being, again, allegedly, I don't know anything that much about it, but it was like remote controlled or something. but we'll see how this all plays out. Chinese stocks still technically bullish, obviously series of higher highs and higher lows. NASDAQ ripping higher, very tough. Do not short this thing unless you know what the hell you're doing. Options obviously would be the way to go. The market is strong, guys. We are seeing constant movements up across the board. You do not usually want to be bearish in those types of aspects. You want to be aware. You want to be thinking about different opportunities. But if you don't like these markets that are starting to go more parabolic in certain ways, remember you've got metals. Then, of course, you've got oil. Then, of course, you've got other commodities. You've got dollars. You've got Bitcoin. You've got so many different markets to get access to. So there's so much opportunity out there. Speaking of opportunity, 116.5, more bullish on Bitcoin, of course. Current level, tough, guys. Bitcoin right down at this anchored VWAP. This is our favorite zone at the moment. So if we lose this, then, of course, it exposes this 100K marker and 98 sweep low into rally potential. And it also exposes, of course, the end of everything. Now, I'm not sure it's the end of everything. I think tokenization has a role to play here, but you just know Wall Street's loving it when they're coming in and they're degrading people's general opinions of crypto, because that is actually concerned. It's what's happening at the moment. I'm seeing so many people saying, I'm done with crypto. I'm done with this. I'm done with that. Now, the thing about when people say they're done, guys, is as soon as the market goes up 5%, we're back, baby. We're back, guys. Yeah, I was a golden diamond hand believer. You know it's true. That's exactly what happens every time. So I take that with a grain of salt. But we do have an Ethereum closed lower, which suggests, again, weakness currently in the markets. And although we've got ETF flows, we do not have a sign here that the markets are like, wow, this thing looks awesome. Look at Solana. Even though the ETF flows are up, it closed lower. So this is making people very upset. And we're obviously going to practice patience, react, don't predict in this case, because that's going to be the best thing to do. Guys, in summary for today's video, it is up across most global markets. We obviously are getting a little stretched here in the US again for a potential little bit of a pullback. It could happen, but it won't. That doesn't look like it's going to be very bad yet. In terms of the Federal Reserve, they're probably going to have to start QE at some point soon. We'll talk more about that when it happens. Do we have concerns? Of course, yes. Are there always problems? Yes. Otherwise, you will not get the wall of worry. But just remember, it's all about bringing in which parts are going to give you edge. And that's something, of course, we talk about here on the channel all the time. Make sure to sub to the newsletter, pin comment down below in description, and it's completely free to do so. Follow us on X, follow me on LinkedIn as well. And if you're interested in finding out more about replicatable systems, such as what just happened on Tesla or so many others that we've had this year, then you should check out the Day Trading Masterclass. It's actually a position-based masterclass. I just don't call it that because no one knows what that means, except for me. And obviously anyone's doing the course. And the reason is because you need replication, but you need to do it based on a healthy level of psychology. And that doesn't mean, your psychology so much. It means, what do the general public do? What do the people that are less informed do? When do you see them get trapped? Remember, patience, react, don't predict is not just a coined phrase. It's a concept that's built into that course. And I think you guys would very much enjoy that. Thanks so much for watching. Have a fantastic day. And I'll see you tomorrow. Bye for now.